what a news flow. The real challenge here is not to find the stories, but what to cut. It is not easy. Gold, I have it scheduled for halfway through the show, the new record in gold, but let's just talk about it right now since we're on the topic. We have a new record, $2,844.90 per ounce. Now, of course, this is thought to be on safe haven demand, is the narrative that is being applied to this number, and I think that's actually probably a fair case. With all of the concerns around tariffs, US, Canada, US, Mexico, North America, I always thought to myself, didn't we just negotiate a free trade agreement like the last time Trump was in power? So I'll tell you what I think happened. The Wizard of Oz behind the curtain, once again, I would argue, is natural resources. And hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli. The metals and the minerals are the reason, I would argue, that the tariffs have been drawn back. And I have a couple of pieces of evidence I would argue for this claim. The irrefutable physical reality in a hyper-modern, world of narratives, the poetic beauty of the mining and metals industry, in fact, is the physical reality, the irrefutable reality of metal. Let me give you two examples of what I think actually happened behind the scenes. And feel free to write a comment if you disagree or if you agree on our YouTube or on our website. Again, I realize these are contentious issues, and big shout out to our American listeners out there. Thank you for listening. But check this out. So Chuck Grassley, longest serving member of Congress, a Republican, puts out this tweet on X on Monday. Biden inflation increased the input costs to farming by 20%, including particularly high prices on fertilizer. So I plead with President Trump to exempt potash from the tariff because family farmers get most of our potash from Canada. So there is Exhibit A of what actually happened here, and here's Exhibit B. This is Bloomberg News via mining.com. U.S. aluminum industry urges Trump to exempt Canada from tariffs. The U.S. aluminum industry called on Donald Trump to exempt Canadian imports of the raw metal from his planned tariffs to help protect jobs and domestic manufacturers. Trump announced Saturday 25% tariffs on imports from Canada and Mexico and 10% from China. The U.S. is heavily reliant on imported aluminum, which is used in construction and a wide range of manufactured goods from car components to food packaging. Shipments of the lightweight metal from other countries accounted for 44% of the approximately 4 million tons consumed in 2023. Canada was the source of more than half of those imports, according to Morgan Stanley. Quote, to ensure that American aluminum wins the future, President Trump should exempt the aluminum metal supply needed for American manufacturers while continuing to take every possible action at the U.S. border against unfairly traded Chinese aluminum. End quote. The Aluminum Association said in a statement Saturday. Then we get the news yesterday, Monday, Trump pauses tariffs on Canada imports for 30 days after doing the same for Mexico. So this is CNBC on Monday, February 3rd at 4:41 p.m. Eastern. President Donald Trump agreed to pause the implementation of planned tariffs on imports from Canada for at least 30 days, Canadian Prime Minister Justin Trudeau said. And don't forget, it was actually President Trump that reached out to Prime Minister Trudeau. Interestingly, as it says here, the pause was announced hours after Trump said he would pause tariffs on imports from Mexico for 1 month. Trump on Saturday said he would impose 25% tariffs on goods from Mexico and China, and 10% tariffs on goods imported from China. Now, interestingly, the rationale that's being given by the White House is that this is being done in order to secure the border. I have to say, I suspect the real reason that excuse is being given is because the U.S. is breaking trade agreements, and the only way that they can break trade agreements is on grounds of probably national security, and hence the border becomes the defense, so to speak, in a future, WTO dispute, right? To speculate out loud here. So another follow-up story here. As we run through everything, China retaliates with additional tariffs of up to 15% on select U.S. imports starting February 10th. So again, we're almost back to gold, right? Because, with all of the messing around here with the North American market. I mean, these are highly, from what I understand, just from being a watcher of the news, and you'd probably agree with me, North America is a very integrated economy. I mean, the North American Free Trade Agreement, that was negotiated by Brian Mulroney and Ronald Reagan. That's how long these economies have been integrated. And as, one economist, I think, put it, some of these car parts are going back and forth like 5 times, across borders here. And so what is the takeaway here? As far as I'm concerned, what has given Canada leverage, according to my thesis here? It is the natural resources. It is the irrefutable physical reality of metal. And frankly, I would even go a step further. It's not just any metal. It is processed metal. It is the aluminum. You cannot build an aluminum smelter overnight. And so the takeaway here is, if I'm Canada right now, I'm going, why on earth are we not building refineries and smelters and metal processing across the entire metals sector? Like from copper to nickel to rare earths to graphite and on and on. Imagine if Canada had all of the refinement, had an equivalent refinement that China has. Just imagine that. Maybe it's a higher cost, but we could probably say, hey, it's greener. Maybe it's closer to the US, right? Instead of shipping it across the ocean, we're just here, a little, semi-trailer ride away. If it could actually refine and smelt its natural resources and didn't need to send them to China, how powerful would Canada be? And the environment is important, but as everybody points out, who's going to take the most care to make this metal processing environmental? Is it going to be Indonesia? That's not what I hear. So why don't we do nickel processing here? And frankly, if there's ever a reason for government intervention and subsidy, it is to build out metals processing in Canada. And you can just point to China. They've put an unfair advantage on processing minerals for the last 20 years. So how much do we risk by putting in $10, $20 billion for all the money that's flying around into metals processing? And this relates directly to this story that just came out in the Financial Times. Beijing-backed lending boosts China's dominance in clean energy minerals. Entity loaned billions to create mining and processing supply chain, report shows. Huge story. Out of the FT, January 28th. China has built up control of critical minerals across the developing world over the course of 2 decades through a network of at least 26 state-backed financial institutions, according to a new report that traces the country's financing strategy. And I think we already knew this intuitively, but now we have an official report that state-backed entities basically funded all of this, takeover, so to speak, of the metals processing supply chain. Continuing on, research published on Wednesday found that Chinese policy and commercial banks, working alongside private Chinese entities and some non-Chinese groups, issued loans worth nearly $57 billion from 2000 to 2021 in 19 low- and middle-income countries for mining and processing copper, cobalt, nickel, lithium, and rare earths, components critical to clean energy technologies such as electric vehicle batteries and solar panels. The study by Aid Data at the College of William and Mary in the United States, which was reviewed by the Financial Times, attempts to capture the extent of China's financing of extractive projects in the developing world. The research highlights the scale of the challenge faced by the West in countering China's control of the global supply chain for emerging green tech industries. Quote, given that China's financing model enables its companies to outmaneuver competitors in capital-intensive mineral sectors, its rivals need to develop more compelling and competitive financing arrangements that are responsive to the preferences of host countries, end quote, said Brooke Escobar, who leads Aid Data's Chinese Development Finance Program. The research shows that more than 3/4 of China's state-backed transition mineral financing via both debt and equity in the developing world was channeled to projects where Chinese entities held ownership stakes in joint ventures and special purpose vehicles. These entities have long-term control over the extraction and processing of strategic mineral deposits, including copper from the Democratic Republic of Congo and Peru, as well as Indonesia's nickel and Argentina's lithium reserves. The data was compiled from the loan recipients and is rarely disclosed by Chinese financial institutions. So something I think we already knew, that ultimately the Chinese government was really funding and subsidizing a metals processing supply chain. So let's continue. Trump says he wants Ukraine to supply U.S. with rare earths. And this is Reuters via mining.com. Of course, we had the audio from Lindsey Graham saying that this war was all about rare earths in December. Now we have a kind of follow-up story here. As it says, U.S. President Donald Trump said on Monday he wants Ukraine to supply the United States with rare earth minerals as a form of payment for financially supporting the country's war efforts against Russia. Quote, "We're telling Ukraine they have very valuable rare earths. We're looking to do a deal with Ukraine where they're going to secure what we're giving them with their rare earths and other things," end quote. So continuing on, we have Henry Lazenby in South Africa at Mining Indaba. A couple of really interesting stories here. And again, related to processing. Africa must shift to local mineral processing amid U.S. trade aggression. This is a story by Henry Lazenby at the Northern Miner. Africa must process its minerals at home as deglobalization and a brewing U.S. trade war threaten raw exports, the Investing in Africa Mining Indaba in Cape Town heard on Monday. Africa's leaders demand a shift from exporting raw resources to local beneficiation. They want to capitalize on a growing supply gap in critical minerals as countries turn inward. Speakers at the forum, called Future-Proofing African Mining Today, emphasized how Africa must transform raw materials into finished products. If not, the continent may lose economic value and control over its mineral wealth and its economic future. And here is South Africa's Minister of Mineral and Petroleum Resources, Gwede Mantashe. Quote, "We must invest in local beneficiation because it is a business decision, not a political one," end quote. And this is the point I've been making. Like, yes, we have to consider the environmental side of things. But I would argue the metals conversation has been overshadowed by the environmental concerns in the last 20 years. You know, this is also about the economy itself. And if the West doesn't have its own metals processing, as I said in Vancouver, it will have one hand tied behind its back economically competing against China. It is that simple. Or as Kirit Jutla, AMEBC's CEO, told our podcast, you know, we will be beholden to whoever is providing us with these metals. A couple of more quotes here from this article that Henry put together. Mantashe continued, quote, "If it costs less to export raw materials than to process them here, the market makes that decision. We must reverse that trend," end quote. Marit Kitta of the African Minerals Development Center in Addis Ababa warned that the time for dithering has run out. Quote, "Africa must take ownership of its mineral wealth by processing it locally. This is not just about economic growth. It's about safeguarding our future against an unpredictable global trade environment," end quote, Kitta said. So the word is out. Processing, ignore it at your own peril. One more story from Henry here, also posted on Monday. Great reporting here from Henry Lazenby, Western editor at the Northern Miner. Here is the other story. Mining Indaba, U.S. trade aggression could stall African metals investment, widening the supply gap. U.S. protectionism could stall mineral processing investment around the world as supply shortages threaten to squeeze markets, an industry conference heard Monday in Cape Town, South Africa. New trade measures have created uncertainty. They could delay projects need to close a widening production gap, Standard Chartered Bank's global head for metals and mining, Richard Horrocks Taylor, said at the Investing in Africa Mining Indaba. The new U.S. tariffs announced this weekend may trigger growth shocks and spark inflation, he said. Quote, "Trade policy uncertainty will create an environment where capital hesitates," end quote, he said. And then scrolling down a bit, we have Gwede Mantashe again. South Africa's Minister of Mineral and Petroleum Resources noted U.S. moves last week to limit foreign aid to some African political policies. He argued that Africa should not let industrial nations dictate its choices. Quote, "They want to withhold funding, but they still want our minerals. Let's withhold minerals. Africa needs to assert its advantage and take charge of the growing demand," end quote. It continues, he urged African nations to use their minerals. They must resist global trade that exploits their countries, he said. For example, China's chromite dominance undercuts local mining firms feeding into it and stifles sustainable development, he said. For this reason, South Africa's income from chromite mining is low. Yet China's beneficiation advances have reduced chrome prices and hurt African miners, he said. Quote, "This is what I call a race to the bottom. We race with one another to the bottom by not taking advantage of what we have, and that will become victims of what we have. We can't allow that to happen forever." End quote. So continuing on. Quick update on Barrick here. How 2 former employees are driving Mali's hardball talks with Barrick. Interesting report from Reuters.com. 2 former company executives with inside knowledge of Barrick Gold's operations in West Africa are helping to drive Mali's demands for a payment of around $200 million from the Canadian miner, according to people familiar with the talks. Mamou Touré and Samba Touré, key members of the government's negotiating team, both used to work in Mali for Randgold, a mining company that is now part of Barrick. Scrolling down, Reuters spoke to more than 20 people, including mining executives, consultants, diplomats, and people with direct knowledge of the talks, to form a picture of the negotiations. The sources requested anonymity because of the sensitivity of the situation. The 2 Tourés are among a small group of key players on the Malian side, which also includes junta leader Assimi Goïta and Minister of Finance and Economy Aluseni Sanu, according to 9 people familiar with the matter. The men, while they share a surname, are not related. Samba Touré, the older by decades, was the more senior of the 2 at Randgold, where he was West Africa Operations Director. Mamou was underground manager for the Loulo mine. But it is Mamou who is now the more influential negotiator for Mali, due in part to his close relationship to the powerful finance minister Sanu, the sources said. And finally, in response to Reuters' detailed questions, Mamou said that for decades, gold production had not benefited the people of Mali as it should have. Quote, "It is only natural that the state asks for a rectification. The state has made a great effort to reach an agreement, which is why all the other companies have reached an agreement with the state," end quote, he told Reuters. Now, relating to that, of course, what Mamou is not stating here is the quote-unquote detentions that have been taking place. And let's not forget Resolute Mining CEO Terry Holohan, who was detained for almost 2 weeks in November. And we have an update on Terry Holohan. Quite a head-turning headline here. Resolute Mining CEO quits following detention in Mali. This is by Cecilia Jamazmi at mining.com. West Africa-focused gold producer Resolute Mining announced on Monday the resignation of its chief executive officer, Terry Holohan, who was detained in Mali for 10 days in November. Holohan, along with 2 other Resolute employees, was held in Bamako, the country's capital, amid negotiations with Mali's military government over operational terms. The detentions ended after the miner agreed to pay $160 million in installments to settle a tax dispute. Holohan subsequently took a temporary leave of absence in December. Resolute said Holohan's resignation was effective immediately. Acting CEO Chris Ager will now assume the role on a permanent basis, while interim chief financial officer Dave Jackson has also been appointed full-time, the company said. Now, if I was to speculate out loud here, I suspect the reason Holohan felt the need to resign, maybe he was traumatized, I'm sure he was on a certain level, but probably the bigger issue is he probably doesn't want to travel back to Mali. And he probably can't not travel back to Mali as CEO. That's what I would guess. And who can blame him? If I was held for 10 days by the military junta in Mali, I probably also wouldn't want to return to that country ever again. But if you have a business there, you might need to. So interesting development there. Terry Holohan resigns. Now, quick updates before we go to this week's Spotlight. Quite an interesting development in Congo. M23 declares ceasefire, and this is a unilateral ceasefire, for humanitarian reasons, citing DRC bombardments. Now, interestingly, I was speculating last week that drones were involved in the victories by the M23 in Goma, in the eastern DRC. And interestingly, I was watching a reporter based in Africa who was describing drones as being the reason, offensive drones being the reason why there was the big quick defeat in Goma of DRC's forces. So it looks like the DRC's army, the Congolese Armed Forces, or FARDC, it looks like they have been kind of upgraded in their weapons capacity based on this headline. So here it is, February 4th, this morning. The M23 has announced a ceasefire starting Tuesday, citing humanitarian concerns arising from ongoing hostilities in Eastern Democratic Republic of Congo. In a statement issued on Monday, the M23 rebel group accused the Kinshasa regime of exacerbating the crisis. The Rwanda-backed group condemned the Congolese Armed Forces, or FARDC, for allegedly using military aircraft at Kavumu Airport to load bombs targeting areas under M23 control. Quote, "We condemn the FARDC's continued use of military aircraft at Kavumu Airport where they load bombs that kill our compatriots in liberated areas," end quote, the statement read. So the DRC seems to have been rearmed here somehow. Let's continue. The rebel group clarified that it had no intention of advancing into Bukavu or other areas after capturing Goma. I mean, they were just saying last week that they were going to go to the capital. So something has changed on the battlefield here. However, it reaffirmed its commitment to protecting civilians and maintaining its defensive positions. Quote, "It must be made clear that we have no intention of capturing Bukavu or other areas. However, we reiterate our commitment to protecting and defending the civilian population and our positions," end quote, the group stated. So M23 finally on defense. Now, I did a search on ChatGPT. Who is providing weapons, particularly air support, to the DRC, just to see what it would say, and I did get a pretty interesting answer. The DRC has faced significant challenges in securing air support and advanced weaponry, particularly in the context of the ongoing conflict with the M23 rebel group. The FARDC, or the DRC's armed forces, have limited access to sophisticated air support, which has been a critical factor in their struggles against well-equipped rebel forces. In contrast, the M23 rebels have demonstrated the use of advanced weaponry, including equipment similar to that used by the Israeli military. Retired South African Army General Mamola Moretti Motow noted that the rebels' weaponry is not typical for the region, suggesting external support. The United Nations has imposed an arms embargo on the DRC, restricting the supply of major arms to the country. This embargo permits transfers of major arms to the DRC government under specific conditions, such as ensuring that the units receiving the arms have completed the integration process or operate under the command of the integrated staff of the armed forces or the national police of the DRC. The FARDC's limited access to advanced air support and weaponry has been a significant factor in their challenges against the M23 rebels, who have reportedly received external support, including sophisticated weaponry. This disparity in military capabilities has contributed to the ongoing conflict and instability in the region. So it sounds like someone's either given some drones or air support to the Democratic Republic of Congo, and based on what we're hearing there from the M23, who instead of saying they're going to Kinshasa, are basically saying, we're going to stay put, we have no intentions to go any further, we are purely defensive at this point. So a bit of a changing of the tides there. So interesting shift in momentum, change in narrative, really out of the Congo, and finally, just a small update on Korea Zinc. We have a story out of the Korea Times. Young Pung files injunction to suspend Korea Zinc recommended board members. Young Pung, which joined forces with private equity firm MBK Partners to secure control of Korea Zinc, has filed an injunction request with the Seoul Central District Court to suspend the 7 board members recommended by the zinc smelter. The request cites significant procedural flaws in their appointments, the Young Pung MBK Alliance said Tuesday. The injunction filed on Monday seeks to prevent the 7 members from performing their duties as outside directors of Korea Zinc until the court decides whether to nullify or invalidate the resolutions passed at the firm's extraordinary shareholders meeting on January 23rd. So the battle for control over Korea Zinc continues. Another huge story that we're following here. Coming up this episode, very happy to welcome Neil Woodier for the first time to the Northern Miner podcast. He is CEO of Aris Mining, and he was a founder and CEO of both Leagold Mining Corporation and Endeavor Mining. He discusses his history and his partnership with Frank Giustra, as well as the role that artisanal mining is playing, which is really not given the attention it deserves. So I'm very happy Neil Woodier came on the program and discussed what the company is doing, pioneering work that the company is doing with artisanal miners in Colombia. So fascinating interview there. And also coming right up, we have Jonathan Lafontaine, strategic advisor for the Ministry of Natural Resources and Forests for the government of Quebec, on this week's Spotlight. And he discusses the initiatives that Quebec is implementing to encourage the recycling and processing of metals in Quebec to supply the North American supply chain. So a fascinating episode in store for you, my friends, and many news stories and metal prices. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. You can find us on Instagram at The Northern Miner and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Jonathan Lafontaine, Strategic Advisor for the Ministry of Natural Resources and Forests for the Government of Quebec, for this week's Spotlight. Joining us today, I'm very pleased to welcome back to the Northern Miner podcast, Jonathan Lafontaine, Strategic Advisor for the Ministry of Natural Resources and Forests, for this week's Spotlight. Jonathan, welcome to the show.
Thank you kindly, Adrian.
It's great to see you again. I saw you in London, and there was all sorts of interesting discussions that took place at this conference. And one of the big interesting themes that is popping up that really doesn't get the attention that I think it deserves is recycling. Now, the government of Quebec has some initiatives in regard to recycling of minerals and metals. Tell us, what is Quebec working on?
It is a very important dynamic, and we do have a series of initiatives that we've put into place. There's a lot of things that we support. So one of the key obvious things, I think the one that attracts the most attention, is the dynamic of battery recycling, especially for electric vehicles and the green energy transition. I think having a green energy transition without recycling doesn't make a lot of sense to a lot of people. So we really want to support that. So there are companies like Lithion Recycling that specifically target the batteries in electric vehicles, in not just cars, but all sorts of large-scale industrial applications as well. They try to recycle all of the materials. I know that they have their own mechanism, their own internal way of developing the recycling process. But their approach has always been to say that the material might not exist today because a lot of electric vehicles have been relatively recently been put on the roads. So the actual mass of end-of-life batteries is not that high today. However, their initiative is really laying the foundation for a long-term approach to recycling these batteries inside the electric vehicles. I think having that approach really sets the stage. It really says at some point we will be able to take this material and reprocess it and then install it back into a future generation of electric vehicle. I think that's really interesting. And in that same scope, what we've also done is we've supported initiatives like a rare earth element, permanent magnet recycling plant in the Montreal area as well. So when these materials come to end of life, we can reprocess them and set it out again. I think that dynamic is really interesting. And once again, what we're doing is we're targeting the green transition. But if anybody is trying to target a green transition without adding recycling into the mix, then I think the point is being missed. I think another interesting dynamic that is also being supported in Quebec is the e-waste recycling. So electronic waste can actually also be reprocessed. And all the electronic devices that are regrouped and shipped to a facility in Rouyn-Noranda can also yield some very interesting materials that we can reprocess in the green energy transition.
Okay, excellent. So the government of Quebec then, what is it doing? Is it basically offering, tax breaks, so to speak, subsidies in order to attract, in a sense, what we might call this theme of recycling? Because I take your point, in a sense, with all of these cars being built out and all this metal being dug out of the ground in order to power this green transition, it's not necessarily seem all that environmental sometimes, but recycling is clear cut. Yep. So it's basically fostering a positive environment, I guess, for companies to recycle.
Exactly. So yes, there is help or there are subsidies to help develop pilot plants, for instance, or demonstration facilities. Things that can be scaled up once they've shown their efficiency, once they've shown that the operations work, then yes, those companies can scale that up, but they need that initial boost. They need that initial help. And that's where we think the government fits in the best. So other initiatives that are sort of close to that are initiatives like reprocessing some of the mine waste or some of the processing waste in different environments. So we can think about, for instance, we helped Rio Tinto develop a scandium circuit in their facility in Sorel-Tracy. And scandium is a very niche, very particular critical and strategic mineral And the market for that is, you know, outside of China and Russia, I mean, the market for that is actually quite small. So there is a big opportunity there to scale up that processing facility. Same thing for gallium, for instance. The government of Quebec also helped. In this case, it was a different facility with Rio Tinto in the Saguenay area to try to develop gallium in a different stream, like a waste stream from the aluminum process. And once again, gallium is very controlled by other countries that are not necessarily friendly to our operations. So it's important that we develop this technology. It's important that we develop these processes. It's very important that we develop this initiative. I think we can also look at trying to reprocess some of the asbestos waste. I think that the government of Quebec and our critical and strategic mineral plan, we've set aside dozens of millions of dollars, close to $40 million. And among that, a little less than 18 million has been set aside to try to create value from asbestos mine tailings. And there are a lot of metals still left in those tailings. So it's a question of finding the right process from which we can extract added value to otherwise waste material that is to a certain extent valueless. So that's an economic engine that we need to tap into. So that's sort of the thinking behind our plan.
It's super interesting. I mean, it brings about this whole notion of a circular economy. And I'm just kind of curious, like, how far along is this? You know, you mentioned Rio Tinto and say gallium. I mean, a major issue right now with the export ban out of China. Uh,
Exactly.
how far along is this? Like, is this in the conceptual stage? Is the test being done? Is it quite far along? How far along is this?
So the agreement that we have with Rio Tinto is to develop a essentially demonstration plant. So right now, the demonstration plant should be being built and coming on stream in the foreseeable future. The demonstration plant is obviously going to be quite small at a first stage, but the point is, once this demonstration plant shows economic robustness, there will be an optionality to grow this out, to scale this up. And I think that's really where we see the best fit for our government investment. It's to stimulate these new initiatives that really target this part of the circular economy. And I really appreciate the fact that you use that term, circular economy, because that's really the concept that we're also trying to get across. The circular economy has a lot of different components to it, but we want to add that thought from everywhere from exploration through to discovery, production, processing, recycling. That's an integral part of our critical and strategic mineral development plan.
It feels like it's, again, as I opened our discussion, it feels like kind of an overlooked area, recycling. But I tell you what I love about it. You know, unlike mining, where you're trying to find where the metal is, and then you're trying to figure out, okay, we'll drill some holes in the ground and it's super capital intensive. Here, you already know where the metal is, right? So as long as you can extract it at a profitable amount, it seems like a no-brainer to a certain degree, and it seems like it should be profitable in theory. All of that, looking for the metal part of the scenario is kind of taken care of for you.
Yes, you're right. And I think that what we've seen is that a lot of these metals are not commonly in use. So we need to stimulate the innovation aspect of it. And you mentioned really the key point is that can we extract it at a profit and use that again? And it's the extract it at a profit that needs more support. And that's where we see ourselves as a government in our critical and strategic mineral plan. We need to support that innovation. We've already financed 12 different projects unrelated to what we've already mentioned for developing the circular economy. Circular economy is also switching how we think about we can do things. So things like there's a project that we support from the MISA group called the Vortex Project. And they have an interesting approach of changing some of the capital expenditure into operational expenditure. So instead of purchasing an item for the development of a project, you don't purchase the item, you purchase the service. So that creates a company which offers that service to that project, but that can then also offer the same service to other projects. And that supports local economy. That's one of the important dynamics that we're also trying to put together in our circular economy, in the circular economy component of our critical mineral plan.
Well, it just seems like an overdue idea. And again, if China owns like the processing of all the minerals, at least wouldn't it be cool if Quebec became like a powerhouse in the processing of recycling metals?
Exactly. So how do we do that? We can't just snap our fingers and have it happen. We have to do the work. We have to do the legwork. So we've rolled up our sleeves, and there are partners in Quebec that have rolled up theirs. And we look at the opportunity, and we see that there is opportunity in developing this. Now, at this point, I don't think I can confidently predict the end of mining because I really don't think that's going to happen. But I think that if you have a green economy transition, you will have to include recycling. You will have to consider materials that are already out of the ground that still contain value. And if you can develop an operation, if you can develop a way of seeing value where others don't, well, that disrupts the market. That's really interesting. That's an interesting economic avenue. And that's one of the things that the government of Quebec is trying to support.
Jonathan Lafontaine, strategic advisor for the Ministry of Natural Resources and Forests. Thank you for joining us and sharing the exciting developments in Quebec on this week's Spotlight.
Thank you, Godfrey.
And thank you once again to the government of Quebec for sponsoring this week's episode of the Northern Miner Podcast. Turning to the website, gold price climbs to record as traders weigh threat from tariffs. This is Bloomberg News via mining.com. Gold hit another record with investors flocking to safe havens after U.S. President Donald Trump reiterated threats to impose tariffs on Mexico and Canada. Bullion topped $2,800 for the first time on Friday. The surge came after Trump said he would follow through on imposing 25% levies on imports from Canada and Mexico on February 1st. He also threatened China with measures without specifying a level. Now, what's interesting, the tariffs have been delayed for a month, and yet the gold price remains above $2,800. It's quite interesting, isn't it? Let's continue. So, big move in gold. Caterpillar shares fall most in 3 months on lower sales outlook. This is Bloomberg News via mining.com. So for all the need to build out the metals supply chain, Caterpillar is reporting a slowdown. This is Bloomberg News via mining.com. Caterpillar shares fell the most in 3 months after the heavy equipment maker warned that revenues will be, quote, slightly lower, end quote, in 2025, with demand concerns weighing on its outlook. The stock fell as much as 5.1% at 9:31 a.m. in New York, its biggest intraday decline since the end of October. Caterpillar's guidance, disclosed with its fourth quarter earnings report, arrives at a tenuous time for global manufacturers, given the tariff threats by U.S. President Donald Trump that could drive up costs and affect supply chains worldwide. And here is a quote from Chief Executive James Umpleby, who said during the earnings call, quote, overall, we currently anticipate 2025 sales and revenues will be slightly lower compared to 2024. We expect continued strength in energy and transportation to mostly offset lower sales in construction industries and resource industries, end quote. So lower sales in resource industries. Very interesting. Continuing on, energy giant Vitol targets copper market with hire from Glencore. This is Bloomberg News via mining.com. I mean, we see it in Saudi Arabia transitioning from fossil fuels to critical minerals. Vitol Group is following suit. Vitol Group has hired a former Glencore trader to develop a copper business as the energy trading powerhouse seeks to enter the highest profile metals market. Bruno Porto, a veteran copper trader who has been at Glencore since 2006, will join Vitol to build out a copper trading team from London, according to people familiar with the matter, who asked not to be named as the matter isn't public. He's set to start in March, one of the people said. It's the latest move by a big energy trader to shake up the world of metals trading, which has long been dominated by incumbents Glencore and Trafigura Group. In the past year, Vitol has added iron ore and aluminum trades as it seeks to bulk up in metals, but the hire of Porto marks its attempt to crack copper, which is the largest base metal market by value. Other energy traders, including Mercuria Energy Group and Gunvor Group, have also expanded in metals, driving a hiring spree across the industry. Vitol has already poached several people from Glencore's trading firms, firstly in iron ore and then in aluminum. So, pretty interesting developments there. Continuing on, another huge story, Chinese firms to build $2 billion Tanzanian rail to nickel mine. This is Bloomberg News via mining.com. Tanzania signed a $2.15 billion deal with two Chinese firms to construct a railway linking its main port of Dar es Salaam to a nickel mine in neighboring Burundi. Tanzania Railways Corporation awarded the contracts to China Railway Engineering Group and China Railway Engineering Design and Consulting Group in Dar es Salaam. So interesting. One wonders, like, this original $2 billion, like, Tanzania has signed the deal. They're paying the Chinese engineers. Is this Chinese investment money that's basically recycled to Chinese firms? Quote, the signing of the contract is the coming into fruition of a bilateral agreement between the governments of Tanzania and Burundi, end quote, Tanzania's Transport Minister Makame Mbara said. Mbara said the main purpose of the 282-kilometer Uvinza-Musongati standard gauge railway line is to facilitate export of the critical mineral and open up cross-border trade between the two East African nations. The African Development Bank will finance construction through a concessional loan, according to Tanzania's Finance Minister Mwigulu Nchemba. Quote, this is a very significant moment because it marks the first foray of the African Development Bank in the financing of Tanzania's railway projects, end quote, he said. Continuing on, Liberia anticipates new minerals discovery will draw $3 billion. This is Bloomberg News via mining.com. Now, Liberia is on the west coast of Africa, sharing a border with Guinea and Ghana, of course, is right below Mali. Just to give you an idea, so below the Sahel, it seems to me, just as the kind of left portion of the African continent turns inward, you see Liberia there on the coast. So, as it says here, studies conducted over 5 decades and funded by the Chinese show that iron ore and rubber exporter also has uranium, lithium, cobalt, manganese, and neodymium deposits, among others, Boake said in a State of the Nation address late Monday. Talks are currently underway with major multinational companies and local investors to mine the new minerals and invest in other related sectors such as energy, infrastructure, and technology, he said. The government projects economic growth to accelerate to 5.8% this year, supported by the new investments from an estimated 5.1% in 2024. Continuing on, aluminum price climbs as Europe prepares ban on Russian imports. This is Bloomberg News via mining.com. Aluminum rose in London as the European Union readied a proposal to gradually ban imports of the metal from Russia. The plan, which has been circulated among member states as part of a broad sanctions package, would allow European buyers to import 275,000 metric tons of the Russian metal under a quota system for a 1-year period before a full ban comes into effect, people familiar with the matter told Bloomberg. I wonder what VW is thinking about this. I mean, you think of the car manufacturers in Germany, already on the ropes is almost to put it charitably. And now they're getting another blow from the EU. So now aluminum is rising in price. Interesting development there. Continuing on, India scraps custom duties on waste and scrap of dozen critical minerals. This is Reuters via mining.com. So back to the recycling theme. India has scrapped customs duty on waste and scrap of a dozen critical minerals. Finance Minister Nirmala Sitharaman said during her annual budget presentation on Saturday. India scrapped customs duty on waste and scrap of antimony, cobalt, tungsten, and copper scrap, among others. Custom duties on waste and scrap of lithium-ion battery, as well as waste and scrap of lead, zinc, and cobalt powder, were also scrapped. Quote, this will secure their availability for manufacturing in India, end quote, Sitharaman said in her speech. So everybody jumping on the manufacturing bandwagon. I mean, if everybody wants to export to everybody else, who's going to be left to buy all this and with what money? Interesting. Another headline here. King coal is critical mineral for South Africa. Minister says. This is Bloomberg News. At mining.com, another story with South African Minister of Minerals and Energy, Gwede Mantashe. South Africa's Mineral Resources Minister Gwede Mantashe said coal is making a comeback and should be considered a critical mineral for the nation because of its contribution to employment in the economy. This whole critical mineral discussion, as far as I'm concerned, they're all critical. If you're using it in manufacturing or for energy or, frankly, for any regular use, is it not critical? So, it's all just becoming a semantic thing. Now, coal. If coal is critical, what isn't critical? And I agree, coal is a critical mineral. So what isn't a critical mineral? Nickel? But I think that is considered a critical mineral. So when everything is a critical mineral, in a sense, nothing is a critical mineral. Let's continue. Quote, King Coal is back, end quote, Mantashe told the audience at a mining conference in Cape Town on Monday, adding that the death of the dirtiest fossil fuel was declared prematurely. He also criticized the parameters by which critical minerals essential to the transition away from coal have been set. Quote, in our assessment, coal is one of the critical minerals, end quote. And another development here from Mantashe. Mantashe also weighed in on U.S. President Donald Trump's pledge to stop all future funding to South Africa because of its new land expropriation law. The law allows the state to seize private land in the public interest, in some cases without compensation. While the law isn't aimed at seizing land from white people, Trump has criticized South Africa's land policy before. And Mantashe said, quote, if they don't give us money, let's not give them minerals, end quote, without being more specific or explaining how South Africa can stop shipping minerals. Quote, we're not just baggers, end quote. You know, it's kind of interesting, this whole tariff war, it doesn't seem to be helping the United States. If anything, the system was already in place to give very favorable conditions to the United States, where they were doing a lot of the value add of these critical minerals and getting raw critical minerals for fairly low prices from other countries. Now all these countries are going to want the manufacturing in their own country. You want to sell cars to the DRC, you're probably going to have to make those batteries there. You're probably going to have to make those cars in the DRC or Liberia, or pick your country, Indonesia, pick your country. So it's quite interesting. Another headline, former U.S. Secretary of State Mike Pompeo joins ACG Metals Board. And ACG Metals is a London-listed copper miner, and this by a staff writer at mining.com. London-listed copper miner ACG Metals announced on Thursday the appointment of former U.S. Secretary of State Mike Pompeo as non-executive director. So interesting hire there. And finally, brawl over tariffs on EV graphite will test Elon Musk's sway with Trump. It's Bloomberg News via mining.com. Elon Musk's Tesla is spearheading an effort to block new tariffs on graphite imports from China, pitting Donald Trump's richest backer against the president's favorite economic tool. Again, the reality of the need for these metals have become the ultimate negotiating tool. If there's any moral of the story of listening to this show today, is having metals and running metals and frankly processing metals, but even producing metals, will give you leverage over your competition as a country. It is simply that simple. That is the takeaway from today's show. Now, scrolling down a bit, U.S. graphite producers argue that their Chinese counterparts keep their prices artificially low. They have asked the federal government to impose much steeper tariffs. So the graphite industry in the U.S. actually wants 100% tariffs. They're currently, as it says here, 25%. And Tesla is now saying they don't want any new tariffs on graphite. Again, I'd say all the leverage in all of these negotiations between countries, as we saw, I would argue, particularly between Canada and the U.S., it came down, I would argue, to aluminum and potash, and who knows what else. But, if your whole manufacturing base is at risk, with the aluminum manufacturers saying, actually, we need Canada's aluminum, that is why I would argue the call came from Trump. It wasn't Trudeau calling Trump. It was Trump calling Trudeau. And this is what is reported. So those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.58%. That is 0.01% higher than last week, so edging slightly higher. The UK 10-year gilt is yielding 4.54%. That is down 0.06% on the week. The Italy 10-year bond is also lower at 3.54%. That is down 0.11% on the week. And the German 10-year Bund is yielding 2.42%. That is down 0.13% on the week. And probably the big outlier here, though, is Japan. The Japanese 10-year bond is yielding 1.28%. That is up 0.08% from last week. And the highest we've seen it since we started recording it, down at 0.97% yield about 3 months ago. Very interesting. Turning to precious metals, gold is trading at $2,844.90 per ounce, a new record, and that is up $98 on the week. Silver is trading at $32.38 per ounce. That is down $1.98 from last week. Platinum is trading at $989.90 per ounce. That is up $43 on the week. And palladium getting a big boost at $1,040 even. That is $84 higher on the week. So interesting moves in precious metals. Turning to industrial metals, copper is trading at $4.30 per pound. That is 10 cents higher than last week. Iron ore is trading at $101.59 per metric ton. That is a mere 25 cents higher than last week, so almost even. Aluminum is unchanged at $1.19 per pound. Lead is unchanged at 88 cents per pound. Nickel has fallen below $7 at $6.89 per pound. That is 18 cents lower than last week. Tin is slightly lower at $13.65 per pound. That is 3 cents lower than last week. Cobalt is at a head-turning $9.78 per pound. That is $2.24 lower than last week, so big drop in cobalt. Lithium is unchanged at $10.74 per kilogram. Uranium is slightly lower at $71.35 per pound. That is 45 cents lower than last week. And finally, zinc is slightly lower at $1.27 per pound. That is a penny lower than last week. So zooming out, a new record in gold, platinum and palladium, especially palladium, edge higher, and industrial metals edging sideways to the lower, with nickel being a standout and cobalt actually stealing the show on the downside. And those are your metal prices. Coming up, I'm very pleased to welcome Neil Woodier, CEO of Aris Mining and a founder and CEO of both Leagold Mining and Endeavour Mining, to the Northern Miner podcast. We discuss Neil's extensive history in the mining and metals industry, and also the company's approach to artisanal mining, which is a pretty major issue, particularly in South America, and how the company is approaching and even pioneering new ways of integrating artisanal mining into the company's operation. So a fascinating interview with Neil Woodier. I hope you enjoy it, and I will see you on the other side. Joining us today, I'm very pleased to welcome for the first time to the Northern Miner podcast, Neil Woodier, a founder of Aris Mining, Endeavour Mining, and Leagold Mining. Neil, welcome to the show.
Thank you very much. Pleasure to be here.
Well, it's wonderful to have you. I mean, you have quite a storied history here in the mining industry. So for those that might not be familiar with you, tell us a little bit about your background in mining and how you got started and what you've been up to.
Okay, well, actually, I started quite a long time ago. I qualified as a chartered accountant in 1968. So after being a boring chartered accountant for a couple of years, I found myself in the metal trading business, working for a group based in the UK, which were principal traders of tin, copper, such commodities. After a few years being in London, as I started off as group controller, I ended up in New York running the trading company in New York, with about 5 subsidiary companies in various countries in Latin America. We were at that stage, we were the largest traders in tin. We did an awful lot of mine finance, and we were buying concentrates in Latin America. So I moved from the financial side into the commercial side. I then was approached and set up a trading company for Lloyds Bank in New York, where we were trading the bank's gold book, silver book, also doing a lot of physical trading. And after about 5 years, and I spent about 10 years in New York, after about 5 years, Lloyds Bank decided to take its business back to the UK, and I decided I wasn't going back to the UK. So I was offered a job with a mining group, Placer Dome, which had just been recently put together, to run a merchant bank for them. So I transferred myself and my family to Vancouver. But after having worked in 10 years in New York, I succeeded in working a day and a half in Vancouver before I was fired. The chief executive stepped down for various reasons, and I was thrown out with him. So I wasn't quite sure what to do. I didn't want to go back to New York. I didn't want to run the trading company. So I started an advisory business for mining companies and Endeavour Financial. And basically, I was advising them on raising project finance for mine construction. My first client was Clive Johnson at Beamer Gold in those days, now B2. My second was Ian Telfer, and my third was Serafino Iacono. I think that proves how small the industry is, a very small industry. So after a few years, I teamed up with Frank Giustra, and we expanded Endeavour Financial into a merchant banking company where we were investing in our clients and advising them. We were a public company. Beginning of 2008, we had 300 million under management invested in our clients. By the end of 2008, as the market collapsed, we had 100 million left. Very difficult to sell your clients and your positions when you're their financial advisor. So we decided that wasn't the greatest business in such circumstances. So we had to hand back all the toys and start again. So we decided we would start a mining company, as we have been involved in the startup of so many with our clients. So that's when we started Endeavour Mining in 2009.
Okay, so we get to Endeavour Mining here in the financial crisis. You start that out. And so this is your first, mining operation, so to speak. Is that fair? This is the first company you've started that we could call a mining company?
Yes, it's definitely the first company we started called a mining company. And one of the disadvantages we had when we started that is that none of us are actually operators. We were a bunch of finance guys playing in the M&A and the bank debt field and trading, things like that. So we found a company that we could buy into, and I think we bought about 55% of a listed company, which had a mine in somewhere called Burkina. I wasn't too sure where that was, but I subsequently found out, of course, it was Burkina Faso. So we bought the mine. We didn't know how to manage it. We put a GO in charge of it. And we looked around for a second transaction, and we found an Australian company with a couple of mines in West Africa, and we did a merger of equals with them. This was a very significant thing for us because it brought in a management team. It brought in a group of South Africans, actually, who have managed and who are technical and who are mining engineers. So we were able, through that company, to put the financial side the old Endeavour had together with that. And that team still exists. That's the team that worked its way through Endeavour and worked its way through Leargold, and the 3 or 4 members of that team with me now as part of the core team in Aris. So that's one of the things I've learned, that if you can combine people's strengths into a good team, much, much better than trying to do it any other way. And we've been very successful in that, and I'm happy to say we still have that team going forward today.
Okay, excellent. So the power of good management is sometimes underrated. So you've stuck with that team the entire time, just to be clear.
I prefer to put it around. They've stuck with me that entire time. They've put up with me.
Okay. Perhaps we might call that a distinction without a difference, Neil, but I can live with it.
One of them has worked with me for over 25 years and a few are over 15 years. So yes, we do know each other fairly well now, which is very good.
Okay, excellent. And just out of curiosity, I don't know if you have any thoughts on this. So, of course, Burkina Faso, West Africa, a bit of a hot spot, you might say these days, a topic of discussion. I mean, what was it like when you started? Was it, you were saying 2010, 2011? How have things changed in Burkina Faso from your perspective?
I think it's more complicated now than it was. It was never simple. I don't think any of these countries are simple. That would be wrong. But I think it's got more difficult to arrive at agreements. We were always able in the countries when we were working, if you came to an agreement, you had an agreement. It may not have been easy, it may have been bureaucratic, but once you were there with an agreement, you were there and you could move forward. And I think that makes a huge difference, particularly when you're talking about long-term capital investments. You need to make sure you have an environment that is going to be in balance for a considerably long period of time. And West Africa is perhaps a bit more difficult now than it was in 2009 and 2010.
Okay, excellent. And eventually, just to tie the bow here on Endeavour, eventually, how did everything resolve over there? Is it still going? Was it sold off?
What we did was we brought in a strategic investor. He sold us a mine, put in cash into Endeavour, and became a 30% shareholder. And he had the right to non-dilute. When a company gets to a certain size, certainly my style of management is not appropriate. I don't want to run a bureaucratic administrative organization with committees. So what we'd agreed there is after a period of time when we'd stabilized, his new team would take over. And it was the company was worth about $2 billion when I left. It's now worth 6 or 7 anyway. And they've done a great job since. So that was nice to see that company continuing. Whereas when we did Lear Gold, we merged it fairly early in its career. It had assets in Mexico and Brazil. We merged it fairly early in its career into Equinox. And that perhaps was not the best thing to have done with the benefit of hindsight. I think the solution we had and the way Endeavour was treated was better than the way we did Equinox. So, I'd have to think how we would be doing Aris ultimately as well.
It's quite interesting. So in a sense, like you're not a geologist, so to speak, like you're coming much more from a kind of a financial perspective to a certain degree as you're kind of arranging these companies and strategizing. Is that fair?
It's fair, but I think the metal trading side taught me an awful lot about business, taught me an awful lot about managing risks. It taught me an awful lot about people when you're negotiating with them and that sort of thing. And we were in various countries trading. So I think that was a tremendous advantage I had in the business I'm running now. No, I'm certainly far from technical.
Super interesting. So you did Lear Gold then, and then you, I guess, merged with Equinox.
Yes.
And then so did you start Aris Mining then while you were still involved with Lear Gold? Was it something that came after? How did that work?
It's something that came after. After the merger, I left. And very quickly, we started Aris. What we in fact did at the start of the company was a private company. Frank Giustra, myself, and some other people, Frank and I put $10 million in each, and we raised about $35 million. And then we raised another 50 by bringing a senior investor in. And we took the 85 and went to Caldos, which had a mine in Colombia, Marmato mine, which they were expanding, and they needed about 280 million to do it. And they were short 85. So we quite simply said to them, here's the 85, but you have to give us control of the board and you have to give us management. So that's how we became a public company this third time round, having made an investment and taking over the management of Caldos. And then we got the license to expand it and started the expansion. And then we looked at what else we could do in Colombia. And we could see that Segovia, which is a very high-grade mine, was essentially a cash cow. And we sort of looked at that, and we couldn't put ourselves forward because we were a little bit too small. So we needed to see how we could bulk up the size of the company, because the whole philosophy we followed is to grow a portfolio of assets by a buy and build strategies, to build a portfolio that's attractive to investors, which is exactly what happened at Endeavour. And they went on and took it further. So we were trying to do the same thing in Colombia. And we saw the opportunity at Sote Norte, which is an old Ike Batista project, which was owned by Mubadala. So we negotiated with them at 20% interest, but the right to manage this project. And it is a project going through the environmental process. And subsequently, we acquired an additional 31%. So we now own 51% of that project. But having that bulking up, we were able then to go to Gran Colombia and propose a merger. So we merged Caldos with Gran Colombia about 3 years ago, which gave us the Segovia mine. So now we have two mines producing about 25,000 ounces a year, both of which are being expanded. And within a couple of years, we should be at the 450, 500,000 ounce range from the two mines.
Okay, super interesting. So, the mining industry has kind of been notorious, I'd say the last, 15 years, shall we say, or last 10 years as being kind of lacking liquidity. And it sounds like you could help bring liquidity to the market, so to speak. So what years are we talking here?
We started Aris just 4 years ago. The first investment, I think we took over Gran Colombia about 3 years ago. Endeavour was 2009 when we started Endeavour, 2009.
Right, and then
Lear Gold. That's about 6 years. About 6 years, then we did about 3-4 years at Lear Gold.
Right, so what I'm getting at here is, in a sense, do you feel because, in a sense, you had liquidity, this was a great opportunity, in a sense, if you kind of knew what you were doing? Like, was that kind of part of the mindset here at the time?
Yeah, we'd spent years as advisors to mining companies, helping entrepreneurs start mining companies with the financing. Frank Giustra's background with very much equity. He ran an equity advisory firm in Yorkton. My background was banking at that stage. So we're putting those two together. We had access to the banking market and the equity markets, advising our clients. So when we came to do it ourselves, we do know how to raise debt and we do know how to raise equity. So we certainly applied those abilities to our businesses. We brought them forward.
Okay, excellent. And just the final part of, say, the historical part of this conversation, How did you know what was a good asset? Like, I assume you had experts of, say, geologists who are saying, like, this is a good mine. I guess, was it your team that you had from before? How did you know what a good asset was? Because that's kind of half the battle here, right?
That's a good question. We've been through various acquisitions and that sort of thing of project financing. So we had that kind of financial analysis and working with our clients who were working with various consulting companies. We weren't too sure, I must admit, when we started Endeavour Mining. When we bought our first mine in Burkina, it was a little bit a trial and error situation. But that was what was so good about the second transaction. That brought in people who actually understood what they were doing and knew what they didn't know, so they knew where to go and get additional answers from people. So that really did mean that we can now look at assets properly, not only from an acquisition point of view, but also from a management point of view. So that was the combination of the sort of technical and financial skills.
Okay, excellent. And so now you're with Aris Mining in Colombia. One of the big issues of the day, which actually doesn't get discussed as much as it probably should, is artisanal mining. And you've done some work in this regard. Like, I guess, tell us, how has your experience been in Colombia as far as developing these projects? And tell us a little bit about artisanal mining and how you've approached this whole issue.
Colombia's a unique situation. It's up in the Andes. It's next to countries that have had vast amounts of exploration. Colombia has had very little exploration. But those mountains have been mined for years at Marmato. The local miners have been mining there for 450 years, about 300 at Segovia. Colombia's gold production is very uncommercialized. It is about 85% informal miners, which are miners, some of which are family groups, some of which are good guys, and some of which are bad guys, have been mining for a long time without mining licenses, without the support. They don't have the capital investment to give them modern day processing. So two things happen. When they're doing that, there's a lot of environmental damage. They're using mercury. They're not cleaning their tailings up. They're being dumped into rivers. They're moving on when an area has been fouled. Because of the lack of investment in processing, and that comes about, I think, because of the environmental attitudes of a lot of people in Colombia. It's a beautiful country. They want to keep it that way. Also, I think historically, over the last 20, 30 years, some of the political and safety aspects were there, so it was not the most attractive country to go to. That's obviously changed considerably. So there wasn't a processing facility. So we now have about 350 small miners. Segovia, which is our principal mine, which produces just over 200,000 ounces a year, about 100,000 of those come from small miners. We have contracted with 40 groups of people, contract mining partners, CMP, who make up about 100,000 ounces of our production. There's actually 3,000 people in that small mining groups. So the 40 mining groups have between 50 and 500 miners in them. So they're not small individual miners. These are groups that we have worked with to formalize, and we help them on health and safety. We sometimes advance money to them. We help them on education. We have an education program with university, which 2,500 small miners are on the web to learn their trade and crafts better. If you look at them, they have a lot of skills that we don't have. As I say, they've been doing this for many, many hundreds of years in a smaller scale than an industrial scale. But they know how to mine in very, very narrow veins. They know how to work within the community. So putting their strengths with our strengths of industrial mining, our processing, our access to capital, our health and safety, our compliance, if you can put those two sides together, you have a very, very strong partnership. Because one of the things is small miners in their processing facilities, which, as I say, the opposite of environmentally friendly, only get about 45 to 50% recovery. We get 90 to 95% recovery. So there's a big financial pie that we can share in and both benefit from. And this we've done at Segovia. So we get tremendous support. We get our community relations right. We get support from the community. We get support from the governors. We followed the example at Segovia. We've taken the same thing to Marmato. We've started doing it there. We're doing it, proposing to do it in Soto Norte, and the community is now on side. So the small miner is a thing that the country wants to do. It wants to formalize them, but it's very difficult for the companies to do that without processing. So we team up with them where we're operating. We are much stronger. They are much stronger. The environment is much stronger. the government achieves its objective and obviously raises downside more tax and revenue. So it's been a very, very good thing for Colombia.
That is so interesting. Are you developing also alongside of the miners, or are you helping kind of guide them as far as like we think there's something over here? Or are you doing kind of a parallel, development where
Absolutely. Absolutely. A lot of them are on our tenement. We have the mining rights in the land that they're operating. We allocate areas to them that are suitable for the size group that they have, that they are more suitable to mine than we are, narrower, smaller operations. So we work with them from a geological point of view. We work with them from helping them do their mine planning. We work with them from a health and safety point of view. They are included in our overall health and safety stat. That the 3,000 I referred to at Segovia are included in our Segovia health and safety stats and that sort of thing. So we also help them formalize their companies. We have about 75 being trained by the university on business management, because they are small businesses. I mean, we think of them as small miners, artisanal miners, but if you can make these people get these people into groups and make them into businesses, they become very proud businessmen and very supportive of you. It's been a very, very big exercise for us, which we're expanding as much as we can.
It sounds actually, fulfilling. You're helping people, with fairly humble artisanal mining, so to speak, and then helping them kind of build businesses, as you say. I'm kind of curious, like, is there an issue with security with all these people? I guess you guys, if it's on your kind of property, they are expected to still, I guess, fulfill certain obligations and rules. It's not just, every person for themselves and just go for it and wherever you want to go. I assume there's a certain degree of, for lack of a better term, regulation on site.
There's a huge amount of that on site, and we've had to build up a considerable team of people to help and monitor. For instance, in Colombia now, we are responsible for supplying them with the explosives that they're using. That's a new rule that came into place on the 1st of January this year. We allocate areas to them and we agree what areas they're working. They have to give all the material to us. That's not to say there isn't some illegal mining going on, but I think what is very important is that as they are an integral part of the community, by working with them, we are supporting the community. So not only are we using our economic power and buying services and employment in the community, we also have this huge partnership. And we've taken it further. At Segovia, we actually have a school which has 850 children in it, and it's a multilingual school, and it's just had its first graduating class. We also help 2,500 other children on their equivalent of 12th grade exams. So we do a lot of social work because we have the infrastructure to do it. And the small miners help us get to these things and can work together with us.
And I assume the government is happy. As you say, they're collecting tax dollars. It's better than the chaos of just, random mining. And it's also the community embraces the situation. So the government, I assume, is on board. I assume you have relations with them. And are they excited about the situation?
We certainly have relations with them, and certainly, yes, I mean, they want to formalize mining, so we're totally aligned with their objectives. We periodically sit down with the Minister of Mines. I do a 6-monthly report as to where we're at. We're working on other projects with them. We've got the Sote Norte project, which we're trying to develop. We're bringing small miners into that. That has given us not just support from the 7 communities and the mayors, but it also gives us strong support from the governor as well. So these now become an integral part of our business in Colombia because, the potential is so huge, but on the other hand, there are no 43 101s, there are no large mining companies. There are about 4 mines in total producing less than 500,000 ounces. Well, 600,000 ounces. The opportunity is huge on a gradual build-up basis using the small miners.
And just finally on the mechanics here, like, do you just have a desk or office where people show up with their ore? And
no.
They drop it off and it's weighed like
No.
like a...
No.
Yeah.
No. We have a big receiving center. We've just rebuilt the one at Segovia, where all the ore can be delivered and it's sampled and weighed, and we go through the financial reconciliation procedure with them. And no, I mean, this is a large tonnage coming through. So it's treated as any other tonnage. And we're monitoring the trucks from when they're loaded all the way through. So it's very much working together. It's not just a guy turning up and giving us a dump load of ore. The formula that we use for them, purchase formula, is based upon the grade that they deliver to us and also the gold price. They participate in the gold price movement. So it's much more of a business for them than just digging ore out of the ground and dumping it off somewhere.
Right. Okay. Excellent. And it sounds like this is a model that could be applied elsewhere in the world. Like, would you consider this, like, in your estimation, a kind of pioneering model that, say, could be applied in places like, I don't know, Congo or wherever?
I think there are elements that it can be. Obviously, it would have to be just the local sector president. And other people are doing this in small ways, in different kind of ways. But I think because of Colombia having so many small mining, artisanal mining situations and the lack of processing, a lot of the other countries where it is, it's sort of in conflict to some extent. Well, we're trying to do the opposite. We're trying to do it together rather than conflict.
Right. Exactly. Okay. So finally, then, as we start to wrap up here, Neil, you mentioned the processing. I think this is super interesting. So just to be clear with Aris, like ultimately, is that a service you're providing to the artisanal miners is to process the ore?
Yes, it's Segovia, which is producing about 200,000 ounces a year now, 220. We are increasing its production by 50%. By the end of this year, our sort of run rate at the end of the year should be 300,000 ounces. And at the moment, it's about 50-50 between ourselves and the small mining partners. That will still be about the same. So we'll do about 150 and they'll do 150. So we take their ore, we process it. It is our ore, we buy it from them. So it's part of our outturn of gold that we market onto the international market.
Okay, excellent. And, processing just in general, as we kind of zoom out to the wider mining industry, like it seems to me that, we see China having a dominant position in the metals sector, industry, however we want to put it. And it seems to me it's because they actually own the processing, not because they necessarily have all the metals, like they have,
Absolutely.
as I say with the DRC, like they make, 75% of the world's cobalt. And I think China produces 80%, through refinement. So I'm kind of curious about your thoughts on refining. To me, this seems to be the bottleneck in the entire, critical minerals conversation. And sometimes I feel it's almost confused with, oh, we got to open a mine. And I'm not sure how clear it is. I think there's some degree of understanding of this, but I'm just kind of curious about what your take is on this whole
Well,
situation.
it goes back to our metal trading days where we were buying concentrates in Latin America and selling them to refiners all over the world. So yes, in some industries, they're very segmented, they're separate. In other industries, they're more together, depending on complexities of processing. But yes, the Chinese have done a very good job at creating processing facilities and going out and buying long-term contracts of supply. But if you look at gold, for instance, gold is more profitable to process it on site in smaller operations than the very large corporations and then export the gold. So the gold industry is sort of traditionally has been processing and mining together, whereas the copper industry has been a bit more diverse and some of the other rare earth industries are as well. But yes, China has certainly done a good job. One of the problems is that the environmentalists want to have energy transition, but don't like mining, and you really can't have one without the other. So there's a lot of compromises that are going to have to be made to give that energy transition, and it's certainly not going to be done at the speed that some people would like it to be done, simply because there isn't the metal supply. And as you say, a lot of it has been put in one area to strengthen that. So there's a lot of things that have to be gone through. It's a much more complicated situation than just let's have clean energy. It's like the mining industry. One of the problems is it's extremely capital intensive. It is extremely fixed cost. And in the case of gold, you have no control over the sales price. And then in addition to that, it takes a long time. It takes, I don't know, some 15 years from finding something to actually getting it out of the ground. These things take time. And one of the annoying things, as I find, is that the market measures us on a quarterly performance basis when we have a long-term asset, maybe 20 years of life. And that will have ups and downs throughout that asset. So it's a very difficult industry to operate in, but vital in every way. And I must admit, a great deal of fun in it.
It sounds like you've had a lot of fun, Neil. And so as we wrap up here, do you have any final thoughts? What are your general sense of the mining industry? Are you optimistic of where things are going? Do you feel like governments are doing enough? Do you have any criticisms of what's happening out there or things that could be done better?
It's very difficult. Yes, the mining industry has a long way to go. I think it is much more focused now. It's not been attractive to investors for various reasons, the risks associated with it, the political risk often associated with it, the difficulty of knowing what's in the ground until you dig it out. Also, I think perhaps there's been some opportunism in the management of the industry. I think that's gone. I think people are much more professional, much more direct now. I think it is much more a critical part. And I think the industry is much stronger now. I think one criticism I have of the industry is that a few years ago, we all got on the ESG bandwagon. Well, the industry was there a long, long, long time before that, doing very, very good things, but didn't actually talk about it. The industry has actually been very bad at projecting what it does good for communities, what it does good for countries. It's sort of been a little bit of ashamed of itself, and I think that is absolutely wrong. It's a very strong industry which does an awful lot of good, and we should tell people that.
I totally agree. And again, when I was recently looking at all the metals that are in a BYD Seagull, the $9,700 car in China, and when you look at all the processing, it's all dominated by China. And to your point, like once you see the numbers, you go, this is more than about, like the environment is basically an important part, but it's one segment of a much bigger situation. Once you see those numbers, you start going, yeah, of course we want to be environmental, but man, we have to build these refiners and smelters and processing facilities.
Yeah, and it can be done in a clean, efficient way. And, it has to be done more than we are now. The balance will swing. I think Trump will have an effect on that. But yes, long term, it definitely has to swing because people do want clean energy and they do want things and they deserve them. But there are conflicts which have to be resolved and compromised on.
Neil Woodier, founder of Endeavour Mining and Aris Mining and Lear Gold Mining, thank you for sharing your time with us and sharing your insight and history on the Northern Miner podcast.
Adrian, thank you very much indeed. Thank you.
Thank you once again to Neil Woodier for appearing on this week's edition of the Northern Miner podcast. And thank you once again to the government of Quebec for sponsoring this episode. And thank you, dear listener, for continuing to listen and support this program. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.